Greetings and welcome back. We're discussing a series of topics on pensions and Peter, capacity for loss. Interesting one. We've had some recent experience of DBATs, the Defined Benefit Assessment Advice Assessment tool the FCA brought out. So some recent experience of that in recent cases. And within that DBAT tool, the FCA makes it very clear, as per COBS defined, objectives, financial circumstances and risk. And within that risk assessment, whatever way you want to cut it, we've discussed in previous videos, attitude, appetite and capacity for loss. Or, you can describe it in a number of different ways, sustainability of income. Or, I'm going to put it another way to you, Peter, right? The ability to bear the risk financially. Now, I may well have the emotional ability to bear the risk, but if I'm coming to an advisor, Peter, and I'm asking for advice, I would like to know whether I've got the capacity to bear the risk financially. And we know that best as described as what?
Cash flow modelling.
Cash flow modelling, or modelling of some description, don't we?
Yeah, and I think that's a great point that you make, is that, you know, that this should be an ongoing process throughout the retirement or the withdrawals that a client makes, is that it is a reassessment at every juncture of the annual review or when somebody wants to take out more money. And I think it is remiss of a financial planner or an advisor not to say to the client, sorry, you're taking out too much money or your plan isn't working.
Peter, I thought you were on another video there, because what you're describing is the thematic retirement income advice review, which
I totally agree with you, John.
Which is a totally different. We're going to have a few more videos about that later on. But in terms of the cash flow modelling, what lessons or what learnings have you seen in the DBAT reviews you've done?
Well, I think the interesting thing about the DBAT reviews, that in the description of the use of the DBAT, is that the client can rely upon other assets. And I think there's a misunderstanding about what capacity for loss actually means. It doesn't only mean the pension fund with 200 grand in. What would be a better, more evidence-based scenario would be that the IFA takes into account other assets that the individual may have to demonstrate that they are not solely reliant upon the income that is being taken from the personal pension fund. Certainly in the work that I've seen you do, John, in terms of defined benefit transfers, we are looking at other assets, the savings, the investments, potential equity release, all of that coming out and bringing to bear in what can that contribute for the plan.
Yeah, well, I think what we've done and what the FCA describes, lists in their DBAT instructions under sustainability or stroke capacity or stroke the ability to bear the financial loss or bear financial losses, known as cash flow modelling. The FCA themselves have described, you know, what assets have you got available in your retirement? The FCA would say themselves, you know, ISAs, for example, retirement assets, retirement, personal pensions, defined benefit pensions, and a whole load of other things which I don't generally take into account myself because of a decision. But those assets have been defined by the FCA as being included within the client's, the consumer's control at the retirement.
And John, another point I'd just like to bring forward there, okay, would be that potentially a better way to assess the capacity for loss would be on a joint basis, whether that be husband and wife, partner, civil partner, whatever it might be, is that to be able to provide evidence on the file, and I want to see a member statement, I want to see a pension statement, that the partner is going to receive £20,000 a year or £30,000 a year from the NHS or from the teacher scheme or something of that nature. Another aspect, John, that we would like to see on the file, but sometimes it is and it isn't on the file, would be state pension forecast. You know, £10,000 a year is a lot of money now in retirement, isn't it, John?
It is, Peter. You've highlighted a couple of key things in there. So first of all, let's. I think one of the key learns is, for me, disappointingly, as I've said to you, I mean, I think I used the word naively. You said, you know, it's maybe my expectations are too high, but disappointingly, when I'm looking at cases, I'm not seeing evidence of holistic financial planning. I'm not seeing evidence data collected about investments or ISAs, different types of investments, whether it's a cash ISA, it's an invested ISA, properties, partners' pensions, occupational pensions. I'm not seeing evidence of that. I'm not seeing evidence of it being properly modelled in the cash flow modeler, proper inflation, proper returns, reasonable returns, charges being properly put into the cash flow modeler. I'm not seeing it, Pierre. Now, when you talk about the partners, right, and I'm on my soapbox now, so when you talk about the partners, if someone's going to say my partner was in the NHS for 12 years or has been in the NHS for 12 years and has got another 10 years to retire, why would you not model and prove evidence on the file that they have the capacity financially to bear the risks going forward? Why would you dismiss it?
Because either, sadly and unfortunately, the advice is too rushed and that not enough time is given for the analysis, for the data collection. Because one of the key points that our viewers need to understand is that there are two parts to. There's the income part, but there's the expenditure part as well. In essence, you need to identify the expenditure in retirement. And this idea of saying, well, how much do you want in retirement? £20,000. And to cash flow model £20,000 from age 65, let's just say, through to 100 is not acceptable, because that isn't realistic. And actually defining and providing granular detail in respect of what the expenditure is required. And therefore the time and the effort that needs to go into that to make the file robust is of paramount importance.
Yeah, and again, I would say, and I would caveat, and there'll be people listening saying, oh, you know, it's up to the client, I don't want to ask them those questions. Well, that's all very well, but if you say you're going to survive on 20 grand, you are going to be a single individual person, and you're going to be in poverty. Because what I would say to clients is, 20 grand, not going to happen. Because we've got Loughborough University research that says for a client to retire on a reasonable amount of money, they need, I don't know what they all figure off the tip, I think it's 30, 35,000, you know, for a moderate standard of living. So on that basis, Peter, if I did have a client said, well, I think we're, you know, 30, 35,000 will, you know, cover us, we'll have no mortgage, we'll do this and we'll do this and whatever else, I think we can be reasonable about it. But there needs to be a reasonableness about the way in which you model the future cash flow modelling.
I agree, John.
I'm not seeing it.
Should it not be the case as well that it should be a comparative position? In other words, if your current expenditure is £60,000 a year, as an example, how on earth are you going to come down to £35,000? What's the give? What's being given away here? What are the differences between the current position and the future position? And the other thing that is so important is that a personal recommendation cannot be made unless the IFA, the advisor, the firm, seeks out and clarifies the financial circumstances of the individual. And without that clarification, a recommendation can't be made.
Yeah. And in the context of everybody watching this, you know, our legal friends, our legal chums, our lawyers, our pension lawyers, our accountants are watching this and looking at cases, and our clients, the IFA clients that have got cases they're either defending or making claims. The evidence of the process, the evidence of the process of giving advice, not the outcome, which may well be the outcome that I agree with in 95% of cases. But if the evidence is in the file to substantiate the outcome, their life would be so much better, including properly constructed cash flow modelling. See you later.